Arab African International Bank. Financial Literacy Series. MQ, Know Your Money.
Loans. What is a loan? A loan usually involves two parties. The borrower initially receives an amount of money called the principal. The lender provides the agreed upon amount to the borrower, who is obligated to repay in the lender, either in equal monthly installments or in form of a lump sum where only interest is paid on monthly basis, while the principal is paid at the end of the loan term in a lump sum. Why do you need a loan? To purchase a certain item, repay an outstanding debt, or personal emergency are some of the reasons a loan is required. Loan types. All loan types share the same basic structure. However, interest rates will vary according to the loan type and the degree of risk it represents to the bank. For instance, interest charged on a personal loan is substantially higher than interest charged on a real estate loan, due to the presence of a tangible asset as collateral, and individuals' eligibility for a loan is closely linked to a set of criteria: experience, employment history, current position, credit history, salary, employer listing with the bank. In most cases, the amount of each loan installment to be paid does not exceed 35 to 40% of the individual's net income, regardless of the number of installments to be paid and their duration. When searching for a loan, the main factors to be kept into consideration are interest rates, eligibility criteria, documentation required by each bank, and loan tenors and other fees like admin fees. Auto loan. Used for the purchase of a car. Most banks will specify certain criteria alongside the type and amount of interest they charge. These include year of production of the vehicle and amount the individual has to pay upfront for the bank to co-finance the vehicle. The vehicle also has to be insured in case of accidents or damage. Some banks issue a power of attorney document, giving the bank full control of the vehicle in case the recipient of the loan does not settle a certain agreed upon number of consecutive payments. Real estate or mortgage loan. In order to receive a real estate loan, a certain set of criteria has to be met, most important of which is that the unit or estate has to be in existence or under construction at the same time the loan application is submitted. Most banks will refuse to grant a loan for off-plan units. If this is the case, other options such as mortgage finance companies specialize in these types of loans. The unit has to be registered with the district that it's in, and all paperwork attesting to its legitimacy must be present. In most cases, bank will finance up to 80% of the unit price. Once the loan is agreed upon between the bank and the loan applicant, the property is then mortgaged to the bank, and the keys handed over to the approved loan applicant. Loan duration could be up to 15 to 20 years. Personal loans. Once the personal loan is approved, the applicant is granted the loan as a multiple of his or her monthly salary. Whether gross or net varies from bank to bank, and the applicant's salary is usually transferred to the bank on a monthly basis as loan collateral. A personal loan is usually a higher risk for a bank than other type of loans. Therefore, a higher interest rate is charged and a limited duration of repayment is set.
Arab African International Bank. MQ, Know Your Money.